What's up, legends? How's everyone doing today? I'm going to give it a second just to make sure that this is actually live because I have not done a live stream in quite some time. So let me just test my settings and make sure you guys can all see me. As soon as you can see me and hear me, can you please just post something in the chat so that I know that even though it's been a while, I have done all of these settings right, because I tell you what, trading does not give me anxiety, but going live and getting technical issues incorrect brings me great anxiety. So who have we got here today? Thank you, Mick. I can see, Mick, this is for you. I saw your comment in the Discord earlier. And just to let you know, I'm not on holiday. This is my life. So anytime you guys in the community feel like you need me, you just let me know. I am always around and always watching, even if I'm quiet. Hey, Natalie, excited to have you here also. Theo's in the house. Matt, Mike G, how you doing, Mike? Morris, Tasha, your old Discord member. Kat, how you doing, Kat? All right, lots of you here. Good to see. I was going to say nice and early, but it's not actually early for any of you in Australia. Yes, Cage, I'm almost out of the 13K era. You know what? Maybe the 13K is the reason that I haven't been doing that many YouTubes. I just really hate that unlucky number, but we are close to getting out of 13K. So the faster we do that, maybe the more I'll get back on YouTube. More regularly. But anyway, let's take a look at this absolute craziness that happened yesterday, because I know probably at this point in time a lot of people are like, what is this price action and what do we do now? So there's quite a couple of interesting hints in this price action that I personally see, and this is why I wanted to go live and just talk about it, because it's not normal behavior, obviously. And, you know, if you're still on your learning journey, it's kind of not that obvious to understand what's really going on. Now, let me just start by saying this. One thing that really annoys me when there are unexpected moves in the market is when all of social media goes on this hunt to try and figure out what it was. That is such a useless and pointless thing to do because it's happened. There's nothing you can do about it. If you're a trader, you should always be looking forward in time as to what move you can exploit next. By taking your attention away from what you can do next, which is the thing that makes you money, you end up in a spiral of just trying to figure out what happened and why that move happened, but it's happened. To me, that's not a good use of your time. And at the end of the day, if you did happen to catch my video yesterday, or you are in our Discord, yesterday I posted this because we caught the long on this here. We caught this long, right? But I posted this to the community. You can see here, this was way before the dump happened. And I said, what did I say here? We've had the board meeting since then. We've shifted out. Now is the time to, at the very least, move your stop or take a little profit. Those are the things that you should be spending your time doing, right? Managing your trades and looking for the next opportunity. So I want to talk about managing that trade first of all. If you didn't catch yesterday's video, be sure to go back and watch it, because even though that price action has already happened, it's educational for the next time that you might be in this situation. So I won't go back into detail on that, but just to know that we were long from about this area here, the bounce of the 200 EMA. The way that I personally manage trades is, as you know, or if you're new here, first of all, welcome. But I basically trade in 3 level rises and drops, right? So when a direction is chosen, I expect that direction or that movement to happen over 3 high volume level bursts and then a potential reversal after that. So this to me here was the first high level burst, and then in between sometimes we have consolidation, sometimes we have a pullback, sometimes we don't have either, but usually we will have one or the other. So this was the consolidation in between, and that made this here rise level 2. So on yesterday's video, when price was around here, I was expecting one more rise, and also we had liquidation levels up higher between 30,200 and 30,800. So that made sense for one more rise. But even though something makes sense, and especially in crypto because it's so highly volatile, you always have to be prepared for the unexpected or for you to just be wrong, right? So even though I was expecting one more move to the upside, I'm not going to risk the unrealized profit that I've made so far on my good decision when I got in off the 200 EMA, right? So the way that I manage that is every time price shifts out of a board meeting, I'll move my stop loss from where it was below the structure down here. I move it to now below the new structure. And that means, let me just put a risk to reward tool. So let's just say I got in here somewhere. That means that from my stop loss being down here initially, my stop loss now gets moved up to here. Actually, that's a stop loss. So it would be down there. But basically all of this here, this part, this movement, this percentage gain, now I can't lose that because I've moved my stop to underneath this consolidation area. Actually, let me put it like this so this actually makes sense. So if that was the original, right, then I'll put this line here. So my stop loss is now here, right? So this portion here, if I bring this down, this 2%, I cannot lose that now if I want to hold on to it for a little bit longer. Then price makes its next move, which I'm expecting, and I repeat the process. So the stop loss after this consolidation area, you always wait for wicks. If we're going to the upside, you wait for wicks to the low, or the opposite way if you're in a short position. You wait for them to happen first, and then you move your stop loss under there. And if they don't happen, you can also move your stop loss under the 50 EMA, right? So that's personal preference. But now in this long position here, I've now got a, 7% gain, that even though I'm expecting another move to the upside and I want to get that profit if it happens, I know that at any point in time, the market can reverse and something can change. And worst case scenario, price comes back down. It's going to hit my stop loss here in profit and take me out. And I haven't given back all of that unrealized profits. Because don't forget, you might be in a good trade here and it goes the right way, but you haven't made that money until you close the trade. So at any point in time, it can be taken back from you. And that is why you have to manage your trades in between. And anytime there is consolidation means that the market maker is accumulating, and you can learn to read that consolidation to get a hint of who they're trying to induce and which way they might go next. But until you do that, or if you're not still learning how to do that, or you're not aware of how to read that, then by protecting your trade along the way, you can't go wrong, or you can't give back that unrealized gain. So this move that happens suddenly, even though if you trade this method or you trade whatever method and you're in a long position, if you managed that trade well, this move to the downside that came all the way back to entry, it should not have hurt you. And that's the number one point that I kind of want to make about that price action. That's number one. Number two is I probably dropped the ball a little bit yesterday, because I did note in that video that the delta was at 20 billion, which is where we start to look for reversals. But it's not a guarantee that the delta is going to turn around at 20 billion. But after this move happened, in hindsight, thinking back on it, I kind of realized we built up that 20 billion delta just in this 1 day move to the upside, and that's too fast. So that was the trap. So that's the learning from that. And at the end of the day, like I said, price came all the way back to where the original trap traders are. So now let's talk about that, because what I do find interesting about this drop is we did not release these trapped traders. I mean, a lot of them would have got liquidated anyway on the move up, but if any of these people who open short positions down here on this, can you guys see that? Yeah, you can. On this little move here, on say low leverage, they may not be liquidated yet. And it's just interesting to me that the price wicked into that zone, but it did not complete this entire candle. So any trap traders there who are not already liquidated are still trapped. And that's an interesting note. And that is what led me to sort of have a suspicion last night that we were going to get a dead cat bounce because of where this retraced into. And that is essentially what happened. The other thing too is a dead cat bounce at this point in the market gives you a really good idea of retail sentiment, because the way that retail would process this when you see a dead cat bounce or a V-shaped recovery, that's what this is right here, right? So what that means is that retail traders, after a falling knife, were not afraid to buy, and that's why we had such a strong recovery. Now, buying a falling knife is a dumb ass strategy, and it will, when it works, it'll pay you well, but it will not work a hell of a lot more often than it does work. So I'm not saying that anyone should have recognized this and caught that move. It's not about that, but recognizing it to know what's happening, to know what to look for when it's safer to enter the market. That's what your focus should be. Don't think that you need to be in on every trade. That is also another trap. So now we know that this is a V-shaped recovery, right? We broke that 50 EMA with volume. I've got to get rid of these liquidation levels because these were the ones that were all taken out on that drop down. But the question now is, where are we now? Now, our initial high of the day at this point in time is at 29,487-ish. But this candle here has my interest because price has not returned there. And this is where all of the supply would be. So this is after that consolidation. This is the first, trigger candle that didn't really go anywhere. It was the small candle that started the move before that big cascade all the way, back to our basically taking away all of the upside move over the last 24 hours. So that candle has my interest for now, and we have not returned there yet, which is not great. We're also dancing around the 50 EMA, so there's no clear direction right there. So, and we're not necessarily in a board meeting either, because it's more kind of like a triangle right now, if I'm honest. If we even use it from this peak, actually, we could probably even go back further from here. We've got lower lows the entire time, but from after the bounce, we've also, did I say lower lows? Lower, oh, you know what they are. Anyway, we've got higher lows here, lower highs here. That's what they are. So we've kind of got this going on right now. So I feel like we're going to get into some sort of a squeeze point before a decision is made, and it could at this point go either way. So I want to have a look at the new liquidation levels to see if that can give us a hint. And look at this, and what immediately stands out to me before I look at the numbers is, see here, so this was the 20 billion delta that I was talking about. It was 20, came down to 17, wiped it all out. $20 billion worth of long positions wiped out in, what was it, 3 candles, crazy. And now the delta is already back at 6 billion. So it really does go to show that retail are thinking any red candle is a buy the dip moment. That can also be a trap. But I'll tell you one positive. So a lot of the people are talking about the US government selling Mt. Gox Bitcoin and whatnot, and that's what caused the move and what. Then I think that that's not true. I don't really know. I don't care because I don't research that stuff. I just trade price action. But if that were to be true, one thing we should be grateful for is that they're selling at the highest price. So what you should be prepared for is that every time Bitcoin gets to around 30K, you should be prepared for it to turn around until it doesn't. So meaning if you get into a good long position and price is heading to around that 30K level, where multiple times we've seen Bitcoin sell off now between 30,000 and 30,500, I mean, again, you should manage your trade well. You should take at least some profit, but you should be moving stop losses. Eventually, it will break the 30K. But until it does, you have to have in your mind that it's not going higher than that. So if you're not willing to take profit, at least move your stop loss to protect your profit. So that's one kind of positive about this, is that if it is US government selling Bitcoin or whatever, they're selling at the highest prices. And so that just brings Bitcoin back down for you to buy cheap, you know. But anyway, looking at this liquidation data now, so as we know, people are still fairly bullish on this. We've got more longs than we do shorts. It's, you know, it's not as big as it was yesterday. It was a 5-1 yesterday, and now it's, you know, a bit closer. So it's getting closer towards the 50-50 sentiment. If we have a look at the spikes out to the spikes of how high, where that highest level is, let's have a look here. For the highest price, we've got 29,964. So I'm going to just put that in so we can see where that is. 29,964. That's probably a bit high. So what else have we got here down below? 29. What's this one? 673. And oops, 232. 673. That's probably going to be a better one. $29,673. Here we go. So that liquidation level is right within that candle. There is another one lower at 29.2, and that is why we had this sell-off right here, which was right at around that 29.2. They may come back to revisit that if they haven't liquidated everyone there just yet. We need to wait and see. But let's have a look at what's below as well, because that's really important. Now there's a lot below, so I'm only going to pick out some key ones closest to price. 27,950. And sorry, this thing is really temperamental. Let me just put in 27,950 while I calm my anger about it. 27,950. 950. That's interesting. I'll get back to that in a second. And then what's here? Come on. Let's go out here and see. Hang on. So for those of you who follow me on Twitter and you see when I update this is the pain that I go through to get these numbers, just so that you're aware. And also my team who update this multiple times per day in the Discord, this is the pain they go through as well. So be sure to thank them, because high block, as much as we love it, it's very painful. That's not where I want these ones. Hang on, let me go. You know what I'm going to do? Let's decrease this and get only the key ones. Can you guys hear me okay, by the way? And yes, thank you for that message there. Please smash that like button if you are enjoying this content, because it does help to get the video around the internet whilst I'm actually live, which then in turn does help a lot more people see it as it's relevant. So 27,953, that was the one I talked about already. And then 28,310 or 28,200. 28,200 is back down here. Okay, so I'll just put that one in just so that we know it's there at about 28,200. So here's what I would think. If I was to think that we've had this V-shaped recovery, it has not recovered all the vectors. That's not a positive sign yet. But UK has only just opened. So we need UK typically, if it's going to run a typical trend, a typical behavior, it's going to run a trend. So we have to wait to see which way that trend is. The start of the potential trend is fairly decent as far as a hint. And what I mean by that is the end of Asia extension to the downside. If that brings in a higher low in UK, it's going to create a W. and that is a typical session changeover hint of an upside move. So I would watch for that, simply because price is currently above the 200 EMA with these 3-ish kind of wicks here. That's showing pushing price back up, and the story is in the wicks, right? Whereas we don't have that as much here. But one other thing to point out, so that's for a W, because the extension was to the downside. See if we come up, get a retest, that will create a W. Another thing we can do is, which is the Asia candle start, I think it's this one here. If we measure the halfway point of Asia's session, often price will come back to that, and it's coming back to it right now actually. Price will come back to that, and it will either break it and retest it, which is your hint to go long, or it will reject off it. It does look like it wants to break it right now. So if you don't get necessarily a W, one thing, and this is all on the 15-minute time frame, by the way, wait and see if you get a break and retest. If you get a break and retest of that 50% line, which is somewhere around 28, 28.9, 20-ish, that could mean more of a recovery is coming from that downside move. I would not be surprised if we fully recover from here, honestly, because you have a look at that delta. It's back at 10 billion in just this move. It was 20 billion before that. It's just showing that people aren't afraid of that sell-off yesterday. So, but again, you have to keep your eyes out and see does the story change as UK starts to run its trend. And the story will change if I get rid of this W, the story will change if price cannot hold, hang on, what am I trying to draw? If price cannot hold that 50% line and it comes back under, then retests underneath it, you would expect the UK trend to go to the downside, in which case it might come back for these liquidation levels. I think that's more unlikely at this very point in time. However, I'm still going to keep my eyes out for something like that to happen, because the session's only just started. And so you have to trade what you see, not what you feel. If we get more into UK and it tells me a different story, then tells me a different story, and that's what I'll go with. So yeah, at this point in time, we're squeezing into a point. There's a lot of liquidity both sides of price. We're right at the Asia 50% mark. So it's fairly easy, to be honest with you, because the 50% mark also lines up with a 50 EMA. It's a simple break and retest, hold above, long, or reject and retest, hold below, short. It's not all that difficult, in my opinion. And the liquidation levels, the decent ones, are fairly far away for that to be a decent day trade at the very least, that may then feed into a weekly swing trade. So that's kind of my feeling. Let me just quickly scroll through these comments before I leave you and see if there's anything unanswered. Whilst I'm doing that, be sure to hit subscribe if you're not already subscribed, and turn that bell notification to all so that you can be notified when I do upload new videos. And finally, what was the other thing? Hit the like button, would be great. So here, what else is going on? William, welcome to becoming an MM. What else is going on? Cabin crew are the best for updating levels on the daily. They certainly are. Sell-off was crazy. Audio is good, thank you. No, it's not a new mic, so that's interesting to know that it's working well, thank you. But it's just my laptop mic, but it is a new laptop. We have news tonight. It might happen then. Yeah, news might react. So I don't have it open, but let's have a look at what news events we've got going on. No, calendar. What day are we? Thursday, 27th, 1:30 p.m. So advanced GDP, unemployment claims. I would probably say maybe core PCE will have a bigger reaction, but either way, you've got to watch out around these times for anything. And what's the outlook on the 4-hour and the daily? Well, if you've got a trend change on a smaller time frame, then it hasn't had enough time to feed up yet. But if you want to have a look at the daily, then it's possible that this is, well, on the daily, this has done nothing but just a retracement at this point in time. It's a pretty high volume doji candle there, but you're still in level 1, you're still in retracement, level 2 retracement on the way towards level 3. So daily is nothing, but if it's going to change on a lower time frame, that will eventually affect the daily, but it's too soon. 4 hour, let's have a look at the 4 hour. 4 hour is M formation 1 2 3, W formation 1, retrace. It just looks like a retracement on the 4 hour to me at this point in time, but this this isn't my focus. 4 hours not my focus. The lower time frames are. At the end of the day, look at this. If we zoom out to, what is this date, the 17th of March, which is more than a month ago, we're just in a range. We're in a range here that was not getting people to commit enough, so they widened the range, and now we're still in the range. So it's just accumulation phase on the 4 hour. So the money is going to be made on lower time frames whilst that accumulation is happening. I think that's all, guys. So I might leave it there. Let's have a quick look actually at Ethereum. What did Ethereum do? So Ethereum actually created a lower low, which is crazy, but same deal. Actually, let's go down to the 15-minute, because where is the vector on this one? Yeah, so this came way closer to that one vector that caused the trigger. Look at that. It wicked right back up into it here. Almost a full recovery, but not quite. And then it's created lower lows ever since. Sorry, lower highs ever since, and higher lows ever since. I fucking hate those ones. Like, I always mix them up what they are, but you guys know. And it's dancing around the 200 EMA. So you know what? ETH might give you a hint of what the entire crypto market's going to do before Bitcoin does. So I would keep an eye on that, because it's right on the 200 EMA, but it's underneath the 50 EMA. So if it comes up around the 50 EMA and gets weak, that's also not going to be a full recovery of this vector right here. It's going to be a rejection at the top of it. That's bearish. So I would watch ETH very carefully. Mark out your zone, which is going to be the unrecovered portion of this candle right here. That's where you want to see, let me zoom in on it. That's where you want to see now, as these candles try to get back into that zone, that's where you want to look for weakness. Excuse me. If it's weak, if it remains weak, meaning lots of wicks like it has right now, we're going down again further, and everything will probably go down. So keep an eye on that. But if it can break through that, recover that entire vector, and then hold above that level, then we'll go to the upside. So it's actually really often the way that ETH gives a much better hint than Bitcoin does. And so even if you want to just trade Bitcoin, always consider what ETH is doing, because the levels are just way easier to count, and the market maker action. All right, guys, I'm going to have to go because I've got some things to do today. How did I learn all this stuff? Lots of different ways, lots of different practice. But if you're interested in learning, you can consider joining us. And also, all the details are in the description of this video. Also, if you're looking for somewhere to trade, OKX is my preferred exchange to trade on. They have super low fees, which is why I'm so attracted to them, because when you're trading a lot, fees really matter. And also, with the link in the description of this video, you can get a further 15% discount on those fees. So that's it. That's all I have for you guys. I'll see you guys soon. Be safe, and also don't rush into trades. Wait for the right trigger, and the right time will come. See you guys soon. Bye bye.